All right, traders, I wanted to share with you a very important market update. I'm going to be explaining to you our updated key levels on where we're planning to buy puts for a bull trap and where we're planning to buy calls for a bear trap. This is going to walk you through the best possible levels to be trading at as of now within the pre-market as we're approaching open. Let's get straight into the analysis. So I need to bring awareness to a pattern that I'm seeing. And what I'm looking to do with this pattern that I'm going to bring awareness to is I'm looking to confirm based off of what I'm seeing when the market's open with candlesticks for confirmations that this history is going to repeat itself. So as you can see right here, the SPY had a massive move up. And then in terms of yesterday, the SPY had a massive move up. If you look at the way how it moved up, overall, this is like identical. If you just compare this left-hand side on May 26 to what happened yesterday, it's nearly identical. And as you can see, the same thing is still occurring. The next day, SPY had a gap up, and then right now it's gapping up. What happened at market open? At market open, it sold off. It came crashing back down to fill the gap below, and it even went under the gap. And then later on throughout the day, it had a bullish reversal for a nice dip buying opportunity if you got in towards the lows. And you can see, man, in terms of this pattern, we're getting strong confirmations already. We have heavy resistance at 420, 463. And if you look at the daily chart is saying that it's due for a pullback at $425. If you study the daily chart, you can visually see, look at the resistance. It got to a high of 420, 495 on this day, and it sold off all the way down to 419.21. There is so much resistance right here. It got to a high of 425.26. It sold off to 421.22, right? There's so much resistance on the daily chart at this 425 level. And this is the first time it's being tested towards those 52-week highs. So based off of the pattern that I'm seeing, the most likable outcome is we have a morning sell-off to crash back down to fill this gap at 421.82. And if history repeats itself to a T, it's going to try to go under the gap and then reverse later. So here's what I'm looking for. I'm looking for put options, and the levels that I'm going to be looking for put options are going to be towards the pre-market highs and a quick morning spike. If we get a quick morning spike and I'm seeing bearish confirmations towards the open on the 1 minute chart, it's looking bearish to me. I'm looking to do puts and play for that gap to fill below. Now, in terms of calls, I'm interested in buying calls, but only in a zone. And this is the zone, and these are the two levels. For a quick scalp, this should work out overall. So if we crash massively, we should have some sort of bullish recovery later into the close. You know, it could be 2 p.m., 3 p.m., later into the close. We should see some sort of bullish, nice little bounce like it did on this day. Now, the levels where I'm going to be interested in buying calls are going to be this. So the first level is going to be the bottom of this wick. We should see a bounce if this test initially at $420.87. That's where I would like to be buying calls, at 420.87. And in terms of a lower level, that would be even better, the 419 to the 418.70. Remember how we discussed in yesterday's video? This is previous resistance that was never tested right here at this 418.70. When they broke above 418.70 yesterday, it just kept on going up and never dropped back down. So when we get back down to the low 419s to 418.70s, it's going to try to bounce, and that's going to be the best level. In terms of if I were looking to hold a trade for a bigger win, you know, I'd be targeting the puts in the 425 range with a tight stop. If I get stopped out, then the next level for puts is going to be 428. Our next level for puts is going to be $428 if we do get stopped out. There's a gap to fill at 428. It should definitely reverse off of that. But look, man, based off the patterns and what I'm seeing, you have key resistance at 425. The first time it tests, it's going to want to crash. In the pre-market, it's already selling off from 420, 460. That's very nice confirmation. If you look at the daily pattern that I brought awareness to, it looks very, very similar. You know, you had a strong move up and then a sideways move up. You had a strong move up and then a sideways move up. And then it continued to push higher for a gap up. It continued to push higher for a gap up. And then it really started to get crushed towards that market open. So that's the pattern, and that's what I'm seeing. The way I see it is, if I were bullish, wouldn't it make sense for me to lock in my gains and take my profits? Because it wasn't too long ago where this was at $423 and it sold off massively. And the SPY has a gap to fill below at 421.82, so it's going to try to go back down to fill the gaps, and it has a nice bottom wick, and it's going to want to retest this wick at 420.87. You can think about it as like a magnet. If this stays below 425 and reacts as a resistance, it's going to be attracted to a magnet to crash back down to 421.82 to fill the gap, to fill the wick right here at 421. It's going to be attracted to those levels if we can maintain resistance at 425. So my game plan is to try puts towards pre-market highs, towards a quick morning spike at open, towards those key levels, quick morning spike at open, pre-market highs. If we're seeing bearish confirmations, towards market open, I'm looking to get in very, very earlier. Now, this could be a trade. So in terms of scalping, I like to scalp. I get in, I get out. This could be a trade where if you want to, you can try to leave some runners on. If you want to leave on 30% of your position, 40% of your position, whatever you're comfortable with, you can try to aim for a slightly bigger win than just a quick in and out scalp, because it makes logical sense due to the pattern that I'm seeing in the levels that we're at. And since we're testing 425 for the first time, it makes pure logical sense to try to aim for a bigger win, but not with your full size. And that is something you don't have to do. Another thing that you can do is just scalp with the trend. So one way to scalp with the trend is when SPY crashes, wait for it to go back up to the previous support level it crashed from. So like, for example, let's say we have support, let's see in the pre-market, where's some support? So there's some support at 423.50. If it crashes below 423.50 and has a nice drop, wait for it to spike back up to 423.50, buy the puts. That's like an example of where it cracks as a support level where the bears were getting trapped, but now the bulls are trapped since it cracked. And then when it rockets back up to that previous support, it's going to try to react into a lower high, react as a resistance because the support level cracked. So those are all things to look for. That's what we're going to be eyeing at. This is my overall analysis. And just think about it, man. If you had calls and you just saw what I saw, the way I saw it, wouldn't it make sense to sell your calls since it gapped up, sell the air, don't hope for the gap and go, lock in your gains, and then hope and wait? So in terms of me, I want my calls at 400, and right here I want to do a scalp on calls at 420.87 because the first time it hits this wick, it's going to try to bounce for a quick scalp. And then I also want calls at 418.70 to 419. So on me personally, I like buying low on the oversold levels. I don't care if this keeps on going up and I get stopped out on puts and I miss out on calls. I don't care. I trade my levels, and I also trade what I see. I don't blindly trade based off of patterns. I bring awareness to patterns, but I have to use confirmations, and I have to trade what I see with the candlesticks that I'm seeing and how the market's reacting at open, and then take advantage of what I'm seeing. But no matter what, I don't want calls at these levels, and I'm not looking to blindly buy puts. But if I were to blindly do something without confirmation, it would be puts. But I don't like trading blind. I want to use confirmations. I want to trade what I see, and I want to combine that with the patterns that I'm seeing. So I would love to buy calls, but not until $420.90 for a quick scalp for calls, and then the best level 418.70 to 419.20 range, right? Those are my levels for calls. So if this doesn't work out and I take advantage of it and I get stopped out towards 425s, my only game plan from there is to wait for a bearish 30-minute candle and look for 428, the 428 gap. There's a gap at 428. That's my analysis. That's my thoughts. That's how I see and view the market personal, and I have no regrets in terms of the plans that I created. I truly love the plan and the moves that are setting up. We will see if there's bearish confirmations.